Hey everyone, welcome back to my channel. I'm very excited about this video because it demonstrates several important concepts when trading, including top-down analysis, ICT smart money concepts, and the types of moves we can expect to see on OPEX. In this case, it was the end-of-year options expiration event, and we could see that TradingView's dealer market diary was showing there would be lots of puts rolling off. However, there was far more to it than this, and I want to get into why. Before we get started, I'll leave several discount codes for trading services I use in the description, including Sonar Labs, TradeEdX, Voland, and Elite Trader Fund. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. Also, be sure to hit the notification bell to get notified whenever I post a new video. With that being said, let's get right into it. So, as I mentioned, going into the day, we could see that dealer's market diary, which I've done 2 videos about, showed that there would be a lot of puts coming off for this OPEX event. And the day that we're talking about here was the last day of the trading year in 2022, which was December 30th. And so getting right into the chart, I want to talk about the type of analysis, and actually ICT had posted this on his Twitter, and this is also the stuff that I've been trained to look for after going through his content, learning the concepts, and mastering that style of trading myself, what really drives markets. So dealer market diary confirmed that we'd be showing a sell-off, but there's another consideration here. And it's not just these puts rolling off, it's also all of the short positions that would be closed out. Because if we look back throughout the year, as everyone should know, we've been in a massive bear market the entire year. And so there were a lot of profitable put positions that would be closed out at the end of the day for tax reasons and profit-taking reasons that would also help drive this dealer market, this run up that we're expecting end of day. So it was far more than just options rolling off across the market, and we'll get into that shortly. But first of all, starting on the daily chart, now this is MES, it's the same thing as ES, SPX, SPY, whatever you trade, you can use these concepts for this. So the first thing that we want to mark down is the previous day high and the previous day low. So you can see I have 1229 PDH and 1229 PDL. So that way we know we have an inside bar here. So chances are we'll be trading within this same range. We've been in this state of consolidation for quite a while, and the likelihood of breaking out is unlikely. Now, that being said, if we did start to break out of the previous day highs and lows, then we could start looking at some sort of trend play. But until that happens, there's no reason to assume that we would be moving out. Now, if we drop down to the 4-hour, there's something that you should notice here, which is this liquidity void. And so we can mark that here, and this should be considered as an absolute top. It's already been filled, but it sort of establishes the top of the range even more so than the previous day high would. And so if we were to get into this, this would be like a full-on take profits for a bullish move. If we even get that high, as you could see, the market at this time, this is right around 9 a.m. and the market is at 38.42. So it's unlikely considering it is an inside day. Now there's another factor to consider here, and that is this fair value gap that we have. So if we zoom in here, you could see the reason why this is a fair value gap is because we have these bullish bars moving up. And so this is doing so without any selling action in between on the 4-hour time frame. And when that happens, that creates a fair value gap. And essentially what we do is we can draw this from the high of this candle all the way to the low of this candle. And the thing to note about fair value gaps is once we break into them, we tend to completely fill them before moving on, especially when we get past the 50% point. But on top of that, they act as true support and resistance. So you can look at the borders of this 4-hour fair value gap, especially once we've broken this far into it without filling it, as higher end support and lower end support. And then so we want to just do the same thing, dropping down to the 1-hour. We can see the 4-hour fair value gap that we drew here. There's another 1-hour fair value gap that is a bit of a tighter range that we can draw on right here, top of this candle wick to the bottom of this candle wick, which is actually what we've broken into. Let's zoom in a little bit further. We can see our liquidity void that we drew earlier up top. The difference between a fair value gap and a liquidity void is exactly that. You could see that there is a gap where the candle's gapped up. It eventually did fill and actually got hit a couple times at this point. It acted as resistance, which is sort of what we would expect today. We can see even if we tried to break out of it here, we ended up just getting pulled back down. So this does help define the top of our range. Now, fair value gap, we do actually have candles moving through it, but it's just the day prior on 12/29 was a big bullish run up to the top of this liquidity void, and upon doing so on these higher time frames, it left just no market auction process happening within here. This is all we could see down here. There's a tiny bit of a fair value gap that we could actually mark, and the thing is, you could see though that it was mostly filled on this wick when it came down. There's also a bit of a fair value gap up here. I'm going to focus on this just to keep the charts cleaner here. Now we can also drop down to the 15-minute. And again, we have this tighter fair value gap range here. And then if you'll notice, we have this price action here, these equal highs, which is the bottom of this fair value gap, which would be 15-minute sell side liquidity. Now, the reason I say that is because if people are looking to take longs here, or they have taken longs here, chances are their sell stops are going to be here. So in the form of sell stops, we have sellers. And so this is considered to be sell side liquidity. The same with these highs and lows of the prior day. This would be sell side liquidity due to sell stops resting under this area here. And then we'd have buy side liquidity due to buy stops resting up here in the form of buy orders. Now, so this is pretty solid for the higher time frame analysis. We do want to drop down to the 5-minute. And what we're looking for here, and I've talked about this in previous videos, is we have our Asian highs. Now we can mark these down, but I really want to draw your attention to these London highs right here. And so we're going to mark these London highs because these are actually equal highs. And the thing is, whenever we have these double tops and double bottoms, people always treat these as like, okay, you need to go short when these are retested. What's not understood is that institutions are well aware of how double tops and double bottoms are played. While this could lead to a good short sell trade initially, which it certainly was, especially as we broke into the fair value gap, retested, failed to move out of it, and started moving lower. The thing is, they know that there are a ton of buy stops up here. So there's a ton of buy side liquidity up here. So this will likely become a target at some point. Now, the higher likelihood is that now that we've broken into these fair value gaps, that this fair value gap will indeed fill entirely before we consider even revisiting this. And this is what I talked about with what we saw with dealer market diary. We had a lot of puts expiring off, which when puts get de-hedged cause buying. And then also we know it's the end of the year. So there's likely going to be profitable short positions being closed. And that all typically happens starting in the last hour. And that's exactly what I was looking for. I actually did a post on Twitter about it showing the trade I ended up taking. And I was pretty proud of it because I got really close to the bottom, which we'll talk about in a bit. But we know that a lot of that de-hedging occurs in the last hour. So I was looking for buying opportunities, and I'll get into why shortly. So that's all we really need to mark up for this. We have our equal highs, which will likely be a target. Actually, because of these equal highs, ICT on his Twitter, he ended up calling this out to be the end of day target, and he called that out at 10 a.m. And this is the reason why. But first, we need to deal with this fair value gap. So I'm actually not going to talk about it too much and go through play by play, but what I do want to do, because I do want to keep this video timely, but I do want you to take note of how price action moves through these fair value gaps and how it reacts in these fair value gaps. So the dimmer rectangle is the 4 hour, less dim than that is the 1 hour, and then of course we have the 15-minute. The 1 hour falls within the 4 hour and the 15-minute, so that's not as important. But pay attention to how these candles react to the borders of the 15-minute and the borders of the 4 hour. And so as we move through here, we'll go ahead and speed this up and get into market open. You can see already that this 15-minute fair value gap is actually acting as a resistance point. However, the true resistance point would be up here. And also as this is forming, just be aware, I didn't point out the order blocks in this, and I'm not necessarily going to, but even on these lower time frames, we form order blocks and fair value gaps that cause reaction. So right here, the market opens, and we get this high volume dump. Now we've been in a downtrend, so what we're looking for here is as this moves lower, and let me just get zoomed in a bit more in this area to make this more visible. As we move lower, and we'll slow this down a bit, how this reacts. So immediately we get this buy up, and we fail to push out of the 15-minute order block, and we get a rejection straight down to the bottom of the 15-minute order block, and then we get an immediate buy up. So this right there, you can see already how this fair value gap is acting as really clear support and resistance. Now, from this buy up, we can expect to stop somewhere at the top of this 4-hour fair value gap, and the reason for that is because this fair value gap has not been filled yet. So let's see what happens. We get up there, we have 2 fake outs, which is one of the institution's favorite things to do. Not only did they clear out buy stops in this area right here, but they also probably caused a lot of people to grow long here, which is obviously going to be bad for them. And then this will allow them to move lower. Would have been a great short opportunity here. You can even see, and this is what I want to point out, is this is what ICT often talks about, how it's algorithmic. We can see here we get this sell, and then every time we try to go up, the fact that these 3 wicks are the exact same level is not on accident. It's being bid lower. It's a chance to move lower, and there's actually ample time here. 3 minutes. In fact, actually, if you count the 2 candles prior, you have about 4 minutes here to get in a short side position, expecting this fair value gap to hold with wick confirmation. So just something to keep in mind as you trade this stuff. Fantastic short opportunity, probably the best first trade of the day. I mean, you could have certainly marketed a buy order off this strong hold on the 15-minute order block, but this is definitely a better setup. And then, of course, your profit target would be the bottom of this fair value gap on the 15-minute, because we have yet to break it. Now, as we do touch it, positions get closed out. We go up to the top of the 15-minute. Let's see what happens here. We fail to move higher, and what's interesting here is this candle, I should point out, is that we did have a fair value gap created on the 1 minute that was filled before moving lower. Did not move all the way lower. We come back up, and now it looks like we're going to reject. And what we should watch for here is this sell side liquidity being taken out, and we have these big selling candles. Sure enough, the sell side liquidity gets taken out, sell stops get triggered, helps fuel them move lower. Now, it does not mean we're just going to go straight down to the bottom of this 4-hour, but knowing that these stops are getting taken out on these equal lows certainly does help justify holding on to this trade a bit if you were in shorts, as that got broken. Now, at some point we do end up reversing, and there's actually, the reason this happens, I should point this out even though I didn't draw it. The reason this happens is because right here we actually do have a 15-minute order block. And so let's go ahead and mark this, and let's just go ahead and make this a darker shade of green. And this order block won't necessarily hold forever. We should actually, I'll make this blue actually. I use blue for order blocks, but this order block, for now, it is holding. It's from the 15-minute. We get a nice hold on that, but we do still want to favor this 4-hour fair value gap completely filling before we break out of it on either side. So we get this buy up here on the 1 minute. Let this play out, and this actually didn't happen. This gap actually, yeah, I don't think this gap happened. I think that's just a bug with the replay. But we start moving back higher here. It looks like we're going to hold. The thing is, we held this order block, and we're actually forming bullish character at this point. So we go down, test this area, start moving higher, pushing back to the top. And up here, we don't quite get there yet, but we can safely assume that once we get up here, there is a very low likelihood of breaking higher. So if we get to this range, once again, it would be a great time to take shorts. We can see weakness start to form here, and then it holds the top of the 15-minute order block to sort of make it appear like it's going to try to go a lot higher. It doesn't really. We're starting to see more weakness. Not really a good trade opportunity set up quite yet, just because it hasn't really cleanly held either side. And we'll let this play out a little bit longer and just take note of how we're staying within these ranges, how these barriers of the fair value gap are acting. So right here, we get a move higher. Sure enough, we get to the top of that fair value gap, exactly where we were before, and we start rejecting. Now this would be a fantastic time to market shorts on this rejection. And at this point, we always want to make sure that when we set profit targets, we set them at previous lows and start scaling out as we move lower, because we're not quite sure when we're going to break below. As you can see, this 15-minute sell side liquidity, the bottom of the 15-minute order block is still acting as support, but eventually we do take it out here. And then at this point, we can continue to hold some short entries. We want to, again, be careful around this bullish order block down here. What ends up happening is, now that we're starting to get into the lunch hour, there's a lot of chop, so I'm just going to speed past this here. You'll just notice how we stay within this range, of course. This is a lot of consolidation here, which we can expect some sort of expansion out of into either a retracement or a reversal. Start climbing back up. And actually, one thing I should note is, look what happened here as well, is we ended up forming New York highs. So eventually these equal highs can also become a target down the road. And knowing what we know about dealer market diary and the end of the year, this will become important. So let's mark these New York equal highs, which again has buy side liquidity in the form of buy stops, right? Because they're selling here. We know that people put their buy stops right here. Institutions know this as well. And the whole idea is we want to think like these institutions, how the algorithms leverage these fair value gaps and how they target clear areas of support and resistance. So right here, coming out of the lunch hour right into 1 o'clock, when volume picks back up, we start showing clear rejections. We're holding the top of this 15-minute order block, and then we fall lower. And so this time when we fall through, we get a very weak attempt at a buy up of this order block, which helps indicate the exhaustion of this order block. So we can remove that as soon as we get it's a very different look from before, where we just tapped the top and moved higher. In this case, we went deeper into it, barely got a reaction, blow through it. Now at this point, the 4-hour fair value gap has been filled. So now we can actually start looking for buys. However, we don't just want to jump right into buys. We know it's getting closer to the end of the day, but we do want to give time for some structure to play out. We get a nice move higher. This bullish move is confirmation that indeed our 4-hour order block worked as expected. Excuse me, our 4-hour fair value gap worked as expected. We come back down, and as we move lower, we'll have opportunities to take long entries, especially as we get later in the day. So we come down here more, and again, once we get a buy up, once we get signs of buying, once we get to the bottom of this fair value gap, this is where we want to start loading up our long positions to prepare for the end of the day. And I actually did personally load long hairs, and then when we rejected up here, I ended up exiting them out. And then going into, this is now 245. This candle right here is where I loaded up more longs. And I was actually playing this on NQ because NQ makes a bigger move, but you can play them the exact same way. And so this is where I'm expecting dealer market diary right here at 3 p.m. Let's see if we can draw a vertical line here at 3 p.m. because this is always fascinating to me, how this plays out. So when I loaded up our longs, my stop is below this fair value gap. I'm very long biased at this point. And sure enough, dealer market diary kicks in. Volume steps up at 3 p.m. At this point, we know dealers, market makers, they are now buying. Game on for de-hedging those puts. We get a massive run up. We want to be conservative in our targets. I took a lot of positions. It was 30 micros. And so we can see here, we just like very weak selling, very weak selling in areas that we would expect to see it. Like for instance, this previous high here it was barely a rejection because there's just so much buying power coming in. Again, it's not just the put option de-hedging. This is also the closing of profitable futures contracts, profitable shares on other ways to play the market. Now, right here, we come down and we have two targets above us. We have the New York equal highs, which was my actual target, and then we have ICT's actual target, was the London equal highs. We come up, reject exactly where we would expect to at the top of the 15-minute order block, but we hold the bottom of the 15-minute order block, so there's no reason to fully get out of our positions. We want to see buying here. We also are filling this bit of a fair value gap and then immediately resume the buy up. This would also be a good time to load new longs. Now, I was pretty proud of it because I was in before ICT, who was basically a trader that I really respect and have learned a ton from. Because of dealer market diary, I was prepared for this initial run up. This is actually the area that him and many other traders got in when we held this, expecting more buying. So my final target is up here. And let's see what happens. Fair value gap on the 4 hour has been cleared. We now have confirmation of put de-hedging in the final hour, and we have a clear liquidity target. So right here, as this buy side liquidity gets taken out, it actually fuels the move higher. And so sure enough, next target would be the equal highs from the London session that we talked about. Get into the end of the day, and boom, buy side liquidity has been targeted and blown out, triggering those buy stops, which is just a massive end of day run up that was completely forecasted, not only by dealer market diary, but just the fact that it was an end of the year OPEX, an options expiration event, and at the end of the year, the profitable shorts were going to be covered, and just causing this massive buy up. On top of that, we know that every single seller who has stops at this point does not want to be going against this big of a move. So it's also fueled by them closing out their position. So there's several factors at work here. But what's amazing about this whole thing, if we just zoom out here, is that we had targets established before the market even opened. When we broke into the fair value gaps, we had several fair value gaps on different time frames that we traded within the entire time. I took off the order block that I had drawn here, but if we recall, there was a 15-minute order block here as well that played its part. And that's one thing too, if you ever forget to mark something on the charts from the higher time frames, the 15-minute, the 1 hour are the biggest ones when you're trading the 1 minute or the intraday time frames. If you ever forget to mark something and you see a reaction that you didn't expect, just zoom out and figure out why. And it was as easy as jumping to the 15-minute time frame, noticing the order block that we had. It was actually right here, and marking it on so we're aware of it, right? And so, considering that if you would have gotten in shorts before touching it from all this action up here, there's no reason why this would have cost you money, because we shouldn't be chasing this late into it anyway. And then we have the change of character, go back to the top, fair value gap not filled, so we reject again, another fantastic short opportunity. We have more short opportunities as the lunch hour closes, and we hold the top of the 15-minute fair value gap. Eventually, when we do fill the 4 hour fair value gap, we want to start looking for buys as we get this character shift going into the final hour, and then clear targets defined above us that we know institutions will target. So there's a lot of information packed into this, and it was a fantastic day. Combination of Tradetics and even just looking at the chart and knowing how institutions seek to target liquidity, and especially areas of that are guaranteed to store stops, which usually in the form of equal highs. How the algorithms sit to fill fair value gaps, as taught to us by ICT, and it just played out beautifully. And the best part is, and I'm gonna do more follow-ups as we've been trading in this daily range. This has been some of the best trading I've had, especially considering we've been stuck in a range, because every single day we've been creating more fair value gaps, we've been creating equal highs, we've been creating clear liquidity targets, and I'll do follow-up videos on this. And it's allowed for using dealer positioning data and just marking up the charts to really get some amazing trades throughout the day. So I hope you found this helpful, and of course, if you have any questions, let me know, and I will see you in the next one.